Bank fixed deposits are one of the most preferable and popular deposit schemes in India. They currently are fetching interest rates ranging from 5.50 to 6.50% for tenures between 1 and 10 years. Other than the interest rates offered on fixed deposits, the popularity of this deposit scheme is also because of the safe and secure nature of the investment. Hey guys, I am Prarthana from ClearTax. Well, bank FDs come with some limitations such as premature withdrawals are usually not allowed or come with a penalty. Reinvesting extra funds is generally at a lesser interest rate if the rates are in the declining trend. So today, I will share the top 5 factors that you must consider while comparing the FDs available in the market. So let's begin. Number 1. Credibility of the bank. FDs are secured under the Depositor Insurance Program by DICGC and an amount of Rs 5 lakh is insured under this. Also, instead of putting all the money in one FD, industry experts say investors could break the investment amount into different banks to reduce their dependence. Additionally, to get a better idea, one can also refer to the credit rating of a bank. Number 2. The interest. Based on the tenure, the interest rates are offered by banks. The interest rates also vary from bank to bank. It also depends on the age of the depositor. Note that the bulk or lump sum deposits attract a higher rate of interest. Interest rates offered to senior citizens are 0.5% higher than the regular rates offered by most banks. For the entire tenure of the investment, the FD interest rates remain the same. Number 3. Cumulative versus non-cumulative. With a cumulative FD, one can reinvest the interest earned on a regular interval, wherein the compounding benefits and the accumulated interest is received at maturity or the end of the tenure. On the other hand, the interest is credited in the account on a regular interval, either monthly or yearly in the case of a non-cumulative FD. Usually, the interest rate, a cumulative fixed deposit, is compounded quarterly and reinvested with the principal, whereas the non-cumulative FDs are suitable for retired investors and pensioners who require interest income to meet their day-to-day expenses. Number 4. Loan. Fixed deposit offer a loan facility to investors, which is one of the major benefits of this deposit scheme. During any financial emergency, one can avail of loans against FDs up to 90% of his or her own deposit. The tenure of the loan can be up to the maximum tenure of the FD scheme, as the maximum tenure is restricted up to the maximum tenure of the FD. Note that these loans against FDs, banks usually charge interest at 0.5% to 2% above the applicable FD interest rate. Number 5. Premature withdrawal. Investors need to pay a penalty to liquidate their FD investment before the end of the tenure, which varies from bank to bank. The penalty is usually charged by lowering the applicable interest rate by 0.5% to 1% by banks. Even though some banks allow investors to break their FDs prematurely without penalty, there are additional criteria that needs to be met. Hence, experts have said that while selecting a bank for a fixed deposit, one should look for banks that impose a low penalty on premature withdrawals. Thank you so much for watching the video. If you have any doubts regarding the video or maybe any future video recommendations, definitely let us know that in the comment section below. Also, do not forget to give this video a big thumbs up and subscribe to ClearTax's YouTube channel for regular videos on finance. Stay tuned, stay happy and take care.